All right, guys, glad to have you on board again today. I hope you had a nice Christmas evening, enjoyed friends and families, and you know the drill. I'm recording this one right before the New Year's Eve, so I wish you that one as well by advance. So see you all back in 2024, or next in 2024. And until then, well, I wanted to kind of give you an in-between present, just to say, well, I've seen over the recent days lots of usual crypto reports being released, big headliner ones, which I usually get to look deeply at, like the Masari, the A16Zs and the like, kind of the regular year-end releases in which they do their regular crypto forecast for the year ahead. So we're going to do it as well here, but for the whole market, not just crypto, and I'll do it earlier next year as I regularly do. So that's the way to go. But the thing is that, well, still this year, and that's the reason why I'm recording this one beforehand, it really stood out to me because, well, generally all of those crypto VCs or researchers in general, which all have proven kind of their reliability over time, just certainly not in the forecasting theme. Don't get me wrong, no one's ever succeeded in forecasting the future correctly, and when you pull out so many forecasts, well, you can just have them all right. So expect, of course, many at least generally half of them get to be proven wrong. So that's the thesis, that there is no one has ever known the future, neither did I, and that's really the way to go. So I would tend to say I'm generally interested in the research, the angle of vision. Most of the time they all have different flavors, more or less tainted to where they're invested their money into, because, well, just like we always do, we always tend to defend the thesis with trading. So that's really the way to go. Well, on that end, this year stood out to me, particularly because of, despite the different flavors and the different investment theses and so on, well, this year sounded like I was reading the same thing all over again. Coming from different mouths, I was like, yes, I've heard that before. I've heard that like dozens of times recently, and I feel like, Jesus, everybody's forecasting the same thing. And that's really, first of all, that time in markets when I tend to say, well, when even the smart ones, because they're definitely not the dumbest ones out there. I've been very critical with some of the YouTube forecasters out there, which generally don't have a bit of experience to open their mouth. Well, on the other hand, these guys are not. These come generally from smart money type of due diligence research and stuff like that. So why do this time around they all agree on some regular theses that are, by the way, pretty convincing among retailers as well? I'm going to go straight to the point. Well, the thesis that they all tend to agree on is Ethereum is going to be an underperformer next year and probably some years in the future, until, of course, it catches back up, OH. But in the short run, and call it next year, Solana, on the other hand, is expected to overperform significantly. And, well, the reason why I'm recording this is because when I look at the charts, because that's what I do, I mean, I have my own thesis and I've shared them multiple times. That's not what I'm going to be doing in here. Clearly, in here, we're just going to look at charts and just seeing how reliably statistically viable are these theses. Do they make any sense when I look at the markets unbiased? Like, just basically, what are the real probabilities of these things to line up correctly? Because I would tend to say very clearly, I think some of it might be right, but most of it is probably going to be wrong, just because everyone is agreed on the same thing. And that's really what scares me, because when the chart says otherwise, which we're going to argue on for the next half an hour or so, I'm going to try letting you know why I think these theses are likely to be painfully proven wrong, or at least not to play out the way I expect it to be. So that's the way. First of all, though, this is kind of going to be a crypto-focused video. I'm not going to talk about the rest, but just going to look at it through a very simple angle. And just to say, there are many things people tend to say is, well, we don't know what next year is going to be made out of. And I would definitely be agreed with that because, well, technically speaking, I don't see any reason to be neither bullish or bearish, just to figure out that we're going to start the year with a pretty average price, which is just going to open every door for volatility early next year and possibly the entire next year. So I would tend to say one thing, the capacity for the market to react to external factors, because when we're basically trading at the value means, well, any external factor which would normally have subdued effect, will have amplified effect here because the market is looking for volatility and we're pretty much trading closer to the average price. Well, that means net, this is where the value will drive these markets. Either the value is increasing, the famous K-shaped recovery. I don't see a market where everybody's going up like 2021 all over again. And if it does, it's very likely going to be short-lived, just like 2021. But TLDR is, well, in terms of global value, if we look at the crypto total, everybody included in here, and if you're just kind of trying to figure out what the value is, the easiest way you can do it is by using a linear regression, just to say, well, value is somewhat subjective. The easiest way to get a sense of it is to use those linear regressions and just to see, well, right now, it would be somewhat $1.4 trillion, and we're trading slightly above it. So that's really the way to go. Second thing, of course, value is increasing. That's the basic of it. So once again, if you're selling those assets, good luck with that. The value is increasing, and for very legitimate reasons, by the way. They might be 99% shit in here. There are still very valuable assets, which we're not going to argue on. So remember, we don't go into the details of thesis. We just go on why the heck do they think Ethereum is going to underperform, why Solana is going to overperform, and while some of the theses, which they all tend to agree on, like the gaming stuff or whatever, are expected to overperform, why the hell do they highlight the particular tokens that have been rising like crazy over the recent couple of months? Feeling like basically they're forecasting to just keep on going what's exactly have been going on for the latest couple of months, which I entirely disagree with, by the way, but charts will be the end game of it. So generally, net-net's to say, I'm not forecasting anything about the prices of the assets, okay? What we're going to be doing today is looking at a slightly different angle, looking at the relative market share distribution, kind of looking at the dominance, which I think is where the true battle is going to be, because that's the true nature of what this is all about. I've seen people looking at ETH BTC charts, but that doesn't really make any sense because there's one that's inflationary, there's the other one that's deflationary and offer yield on top of. So that's really not the way to look at the true value. But instead, if you look at the dominance, which are denominated in market cap, we're getting rid of all these noises, and we're looking at the true thing when it comes to who is going to capture most market shares in the following expected couple of years. All right? So we're going to look at it through the weekly reference time frame chart in here, and nothing too fancy about it, kind of oscillating between weekly and monthly because we've stated it before. The weekly is kind of very aggressive, seems to be lagging a bit. It seems to be very violent. As you can see, the context boxes are absolutely fucked up in the bullish cycles. Then we build up these kinds of new ranges, install the value again, and then crash up or kind of blow up again, range again, and kind of do the same thing over and over again. So seem to have been the pattern so far. Is it going to repeat? We're going to see all of it. The truth is that now there is an impending structure that we very well know of, and it is that pattern of alternate trend structure, which means we've got multiple breakouts. Normally, remember, an asset just builds a range, break out of it, and settle the value in a higher value. Well, in here, that's not what we see. First of all, these so-called breakouts are excessive, to say the least. They do tend to follow the pattern of pulling right back to the rising moving averages and kind of revisiting the breakout area, which is just basically we go up like crazy and then we correct very deeply, we retrace to very significant levels, but we still recover when we fight against the rising moving averages. And that's pretty much the way it is. We have trending behavior, definitely excessive on one way, heavy violent pullbacks, and then the market breaks out again. So we got a couple of breakouts, one after the other, separated by markets pulling back to averages. The second pullback, when it does overlap with the previous resistance, which is exactly what we have, and when it goes with this same rising moving average kind of pullback, and it goes from bullish to bearish every single time, well, that's a pattern we know. That's the alternate trend structure. That means this one might be playing out between weekly and monthly. We've said that multiple times, but that's the same thing. You see the overlap, kind of seeing, pull back to the moving average this time around. Well, the moving average could be slightly higher. So in terms of crypto total, we tend to say that, well, we could see somewhat of a pullback. So looking at the current prices, like we've seen, we're trading slightly above value, and multiple factors still tend to say that we're very close to it. But that doesn't necessarily mean some undervalued thesis wouldn't show up. For external reason type factors, like, I don't know, last time around, we've had those external factors with the COVID, which got us right back to the moving average once again, like on a second test, before which a trend actually truly emerged and broke out of this 400 billion kind of area. Well, this year around, the level to break is 2.27. All right. Truth is, well, we can definitely go there and break. One thing for sure is that the trend alternate trend structure we're in, if broken above the 2.73 trillion, is going to be excessive, and we know that already. This structure is going to be longer than the previous one, so kind of remember that I've been painfully proven wrong on the previous cycle. I was among those who fell for the narrative of the super cycle. Well, truth is we've gone to this very aggressive bearish reversal, but I am once again in that trend again to say, well, the structure that we have in here, consecutive kind of breakouts, overlapping each other and pulling back to rising moving averages, is, well, worst case scenario, we can go back there again, catching up with the moving average and kind of revisiting the current bottom. So that would be an absolute wreck of another 50% drawdown. To me, that wouldn't change nearly the underlying pending bullish structure. Just means looking at the market now and the violence of this bear that we've had, kind of liquidations cascade and stuff like that, on top of the US, generally speaking, the most favorable for innovation, has turned out to be fighting against crypto with a cabal. So that's really have been a surprising bear market. So the recovery out of it, I would be too stupid to say I know how it's going to play out. So are we going to go right back down again? That's a possibility. Have we played the downswing again? It's not necessary to go any lower. We see that the overlap is pinged up and the line in here is solid. So we're kind of open granted to go to the whole-time highs now in a monthly chart. So that's really the way to go. We could pull back. That's a possibility. Absolutely not a necessity. I think we can definitely agree that the monthly is seriously lagging in here, just like the weekly is a bit more sensitive, and it's just fucking up the boxes when we go up, and then we build those ranges over again. All right? So breakout area, 2.4, somewhat. If we kind of succeed breaking above those levels, well, that means the final wave is going to show up. It's going to be the extended wave, so this one could last longer, could last for several years, longer than the previous one. Could totally change the narrative of these usual 4-year cycle stuff. And on top of it, well, it's going to be excessive. So we know one thing for sure is that this one is going to at least extend to the 1-to-1 ratio. So that means if we take the previous high, pull it down to the lowest candle close and apply a 1-to-1 ratio, we will at least go $5 trillion. So that's the bare minimum. That means we're going there at least, and we're probably going to go higher than that. Another kind of reference in those schemes is generally going double that. That means we could average into somewhat $7 trillion. All right, that's like tripling the range upwards, doubling it upwards. So that would be 7 trillion as kind of the value area. That's the reason why I built this kind of massive big area, which is of course disputable, but if we pull it out, that would means, well, minimum 5 trillion, average 7. That means, well, somewhat of a higher value area would be somewhere around 9 trillion. That's the area where I think we're headed, generally speaking, in terms of crypto. Okay, that means out of it, if we take the rational average value for the bottom, which would be $1 trillion, remember, no one's buying at the lows perfectly, whatever. Those who pretend to do it are generally the most outliers in this party. So just try to say, well, average bottoming area 1 trillion. We're already 60% above it, and that's really the way to go. But the way upward is somewhat around $7 trillion expected value. Of course, you know, speculation can outrageously push up right up to 9 trillion. That wouldn't nearly be a problem. Also, another thing, this cycle could be somewhat longer than the previous one. That means this one can be excessive and go very rapidly there, but it could also lag a bit. So that's really the way to go. We know one other thing is that generally these wave 5 extended will V-top. That means we can overshoot above the area, but anyway, we're going to pull it right back there. I would say an average minimum value expected at the end of this V-top reverse and very violent pullback is going to be somewhat stabilizing over $7 trillion. All right, expect the range to bail out there and the value to stay there. Remember, this is not a one-way up and then we go down. Let's read the one-way up and we stay there, okay? So the value will going to be $7 trillion. Not 2024, just saying over the years. We'll agree about that. The question now is, upon the next year's, with an S, thesis, what is the likeliest distribution of those expected profits to come, okay? So my number one thing is to say, well, I'm going to leave room for chaos, and one thing is for sure, I think one of the future components, headliners, is not yet there. I would tend to say I don't know what the thesis is going to be. I have my reasons to believe that it's very likely going to be DSOC, like decentralized social medias, because that's one of the things that's going to be very, very dramatically market fit. Ahead of potentially DID, decentralized identity, I think these algorithms will be fueled by the activity we're going to put online on some blockchains. And censorable blockchains. Remember, that's once again the big thesis. Like Elon Musk is discussing freedom of speech, whatever. But very questionable direction there. Truth is, I think we need a decentralized social media. God knows if that's going to be the new thing for the next cycle. I wouldn't be too stupid to say I know. I would tend to say this is something disruptive and hardly going to be forecasted beforehand. Just like basically NFTs just came right up to our faces and surprised everyone in the 20 more bull run. So I would tend to say something unexpected, somewhat closely related, I guess, to social media. Everybody's expected gaming, like gaming is going to be the thing, gaming. Once again, I think this is not where you expect it to come. So I would tend to say, expect the unexpected and give it some room, give it some breath, okay? But despite that, well, what are the theses that are already existing today, which are very likely going to take most of the forthcoming gains, because, well, some very established cryptos definitely are market fit already or showing signs of being market fit. And the question is, therefore, what are the relative strengths for this? Who is going to gain more market share, who's going to surrender, who might have risen too quickly, and so on. And this is where I would tend to say we clearly need to look at the second thesis, this kind of battle around what's going to happen with the alts. Like, is it just a Bitcoin and ETH scenario? Like, yeah, you know, Bitcoin ETF is yet another of those narratives where people expect massive inflows in Bitcoin. We can look at the charts, and I entirely disagree with that. So once again, looking at the dominance just itself, I expect the Bitcoin dominance to go down. So the thesis in here is it all just going to be Ethereum afterwards? Well, the answer tends to be no. If we look at Crypto Total 3, in here we tend to see this similar structure of we kind of go immediately bullish, and then we violently go back to where would have been the initial breakout area, kind of bullish to bearish. We kind of retrace the moving average. In here, the moving average has been absolutely messed up, but that's really not the way to go. It just lacks of a bit of history beforehand. So that's basically pulling back to the rising moving average, kind of building a second range, breaking a second time in a row, kind of extrapolating value, but it's failing to sustain the trend. And then boom, going from bullish to bearish again, retracing to the previous market top and finding out the rising moving average. So that's exactly the same pattern as we have with the crypto total. So one thing is for sure, looking at these charts, I have similar conditions when I look at the crypto total and the crypto total 3. So one thing I could tell is that likely a large share of the gains that is going to come from altcoins. So that's one thing. So if you say, well, sorry, Ethereum, Bitcoin maxis, like all the gains are for these and the rest is just full of shit, well, I would entirely disagree with that. Just looking at this raw information here, it seems to be that altcoins are going to perform the wave 5 extending, okay? So that's very, very important to figure out. The second thing is that, well, if we look at the potential extrapolation for these kinds of rewards, is to say if we do the same old story, okay, taking and doubling out the existing range, that give us right up to the $2.82 trillion market cap, okay? So kind of same story, extending it into a value area which we can reach out to, which would be somewhat between 2 to 4 trillion, okay, with an average, 2 to 3.6, okay, with an average kind of settle price to 2.82, okay? And that's really the way to go. That would be kind of our targeted end of area, okay? Oops, sorry about that. That would be neutral zone. Okay, so that would be ending up somewhere in there in a somewhat shorter version of it or a very longer one if we take some time. But all things that we know for sure is that the end of it is going to be a V-top. Okay, and we're likely going to overshoot in this area or slightly higher until, of course, we go back there with a V-top behind us. There's no way for you to figure out the highest price, so once again, expect speculation, expect some dumb trades, and just, well, take your partial profits as your way up, and understand that anyway, this time around, the value has moved, which means when we end up in the terminal area, we're going to stay there in range for years. All right. So that's the first thing. The second thing is then, well, we're going to look at dominances, okay? And the first thing is, well, the Bitcoin dominance. It's been hell of a narrative. I said it and I'll say it again. The moving averages are rejected systematically. It's not just a one-time thing. It's been happening over and over again, and I expect it to happen again this time around. If we have a look at the monthly reference chart in here, which seems to be kind of the end game of it, same story. Moving averages are dropped. That means there is a trend going on. When you fail to recover the averages, it means, well, something's really going on. So the area which we're in, likely going to be a resistive one, at least that's definitely what I would tend to agree with, and that means the next target is to trade below the context. That means there's no strong reversal signals there. I think we're headed back there. I expect another breakout to happen. That means normally 1-to-1 ratios are to be expected. So what I would then say is, well, targeting anything below the falling context is somewhere around 30%. We're 51 now. So that means there is 20 points to drop in terms of Bitcoin dominance. Remember, Bitcoin dominance going down doesn't mean Bitcoin is going down. That just means Bitcoin is going to lose the current market share it has as 51% of the overall market cap. That's just all it means. Okay, Bitcoin is likely going to go up. It just means it's going to give up some of its current market shares to a competitor. Question is, who's that going to be? Of course, like you stated before, consensus tends to say Ethereum is going to lose market shares again. That could be consistent with what we said earlier, like the crypto total 3 seems to be the one to make the gains, but the first thing is that that doesn't line up. Remember, the crypto total, we've said, is likely going to target somewhat like 7 trillion in average value, and of course expect it to peak higher as it's likely going to be stupidly looking for a VTOP. But let's say average value 7 trillion, coming out of the 1 trillion area that we've been trading for this bottom, okay? That means somewhat adding $6 trillion. And well, if you look at the crypto total 3, including stable coins, by the way, that means, well, what we've seen is that we expect it to terminate somewhat at 2.82, starting at an area which is somewhat, let's say, 80. So that means we're $2.5 trillion to be added. So if you compare it to what we just said earlier, there's a shitload of money that's still going to be coming out in Bitcoin and Ethereum. So if Bitcoin is losing market shares, but still both of them combined need to account for somewhat $5 trillion, $4 trillion, that means, well, a lot of these market shares should actually fall into Ethereum's realm. That's just basic mathematics. It just says, looking at the current structure we have on altcoins, they're definitely going to score some $2.5 trillion with value, but still, hell, a lot of it should be in Ethereum and Bitcoin combined. And if Bitcoin goes down 20 points, Ethereum might take some of it. That's really the way to go. And I think by just looking at the charts in here, we understand that, well, frankly, I'm looking at the lenses that I use. I mean, Mitch, I use my strategy, and you might not use it or use another one. But truth is, I do what I do, and I keep doing it just the way it goes. So here's what I have on the charts, okay? The first thing that I could say is that we're starting to get monthly context here, okay? So all I would say is that in this reference, okay, I would get a boundary. That means the dumb boundary trade. It means in a range, I don't forecast too much bullish, bearish. I'm just going to say, okay, this is all just dumb trade. I put my Fibonacci's, and one thing is for sure, I don't trade as long as we don't have sufficient kind of prices moving along away from the value. I need to kind of have speculation going extremely one way or the other to fight against it. And we're sitting right in between. Therefore, the first thing I know is that, well, those who make the bearish bets, they say, well, we're going to go there, okay? What I would tend to say is that there I don't have the context to buy. So I would understand some that say, well, ETH is going to lose a lot of market shares. And some of them, forecast could go down to 8% market shares, which frankly, I understand. We could go there. If we go there, I'm going to be the first one to buy like crazy, okay? So one thing we can say is that if we go 8%, it's not going to last, okay? But some people said ETH could underperform significantly for the next couple of years or so before overperforming again, okay? So that could be their thesis, and graphically speaking, I tend to say I could see that happen as well. Why I don't see that happening is because, of course, on the other hand, the next speculative area is a bare minimum 25%. And remember what we said earlier, likely Bitcoin's lose is going to be Ethereum's gain. And we're expecting 20 points to be lost by Bitcoin, and I think Ethereum could take 10% of it, and even eventually more. Because in here, as you can see, the monthly range is not very mature, it's just kind of building itself now. And if we have a look at the shorter time frame, like at the past activity, what happened then, back then, before the monthly chart kind of took over, and we would see this, okay? Though back then, big range has been built, top, bottom, huge retracement, and as you can see, Fibonacci is attached. This was the sellable area, okay? Of course, back then we didn't have that bottom, so this fib has to be there, and as you can see, boom, touched it perfectly. That was absolute neat entry for the bears, kind of saying, yeah, okay, we're just shuffling the deck. I'd rather like to be in. Of course, in here, there were not enough for supply, so this was the second area, trading below the context. This is exactly where a nice bullish entry could have played out. The bulls in here would still have been in, because remember, there's a size for stop loss. That means in here, there would be no way to be stopped out. It's kind of still in the risk management area. waiting for this trade to validate, and that would have been somewhat here in the middle of the range. Okay, we would have made new lows, and that's basically the way to go. We need to move our fibs, and that's it. That means the bulls back then would have taken the profit at 17, and as we made new lows, would have waited for the dumb pullback. And that's really what we're having here, the exact pattern for the dumb pullback. We go straight into the dumb zone, profit takings are performed, and then the prices pull right back into the buyable area again, which of course the bulls are supposed to take control of, and they exactly do that. So in here, the bulls are taking control of prices again. They're pulling prices over, and normally the target for this is first taking profit in the middle of the big range. So here, seconding profit is in the opposite Bollinger Band, in the opposite range area. Okay, so basically the second target for this is to go there, is to go on the opposite way around. And that's frankly where I think we're headed. So if we look at the past, the bulls have taken control of prices at 2 occasions in the past, twice, and they've succeeded both ways. This one was very short-lived kind of resistance, and I think we're going to go test it again. Question is now, what the heck is going to happen at 25% dominance for Ethereum? Because once again, well, I doubt we can overshoot very significantly, but we'll see that the resistance there are still kind of narrow. So I think Ethereum is going to go 25% in the coming years. That's the truth. And summing out of 16%, which we're currently trading at, that's a 10-point up in Ethereum's dominance. And that's the first thing. Of course, I understand the risk is to be proven wrong and going right back down to 8%, which doesn't really make sense in the frame we've highlighted so far. That means some of Bitcoin's losses have to be Ethereum's win. The other way around is therefore Bitcoin taking the 10% losses of Ethereum on top of the existing 51 it does have already. That means 60% of the money goes into Bitcoin. I can imagine that happening. That's what these guys are forecasting. I disagree with that. All right, what's next is the Solana dominance. Well, I would tend to say, here's what I have for Solana dominance. Certainly not enough for monthly reference chart in here, so we're going to have to go back to weekly. When we have a look at it, the first thing that stood out to me is, of course, look at the violence of the context boxes. We're going to remove the prices so you at least don't get biased. And you would see that the value is increasing significantly. And then, of course, boom, massive 86% withdrawal. And that's basically the way to go. We go from bullish to bearish. And yeah, truth is that it's violent. And back then, it would have been an easy buy, okay? Clearly, we go into the Bible area. And like I said, I've been reinforcing Solana back then. It was way too stupid to trade it back down. Now, the truth is that we've gone immediately from boundary to boundary, okay? We're definitely above the context boxes in here, so that means, well, to me, since we've traded 2.26, that's where I've started to unload my Solana trade, basically taking some profits. That's basically the way to go. Now we're overshooted to new highs, and the question is, well, is it legitimate? I see some people saying, yeah, we're going to go higher. Okay, then I see 2 ways for these things to play out according to my pattern possibilities. This can't be a trend, okay? Remember, you need to have a mature range, you need to have a third range boundary before breaking it out. That's what we've seen earlier. Remember, by the way, in here, in order to break out, we needed the third range boundary to be plotted, then consolidate, kind of either accumulated, that means building a short-term range, and then breaking. When in here, we see none of it. That means, well, what the way we have for Solana is up, down, up. Though, that means 2 things are going to come out of it. This is either going to accumulate, ranging a little bit and kind of consolidating again, maintaining maximum 61% retracement of the final wave. So that means I hardly imagine this Solana going anywhere below 1.26 kind of market cap. If it's still a good asset, which I definitely think it is, it should kind of retrace and range for some time. So the first thing I would tend to say, if this thing really wants to settle its value above 1.5% market shares, no dominance, okay? And if we want to do it sustainably, like building a trend, I need to have an accumulation. Otherwise, if we keep breaking like that, without even making a third range boundary, the best we can do is a 1-to-1 ratio. So I would tend to say this cycle ahead, well, if Solana keeps grinding its way higher the way it does, and we see that I don't even see that happening, well, maximum market shares is 6%. So remember what we said earlier, if Bitcoin loses 20 points and Ethereum somewhat loses as well, well, that means someone else is going to take some tremendous market shares there. I don't see anything for Solana. Solana is best case scenario 6%. It can overshoot 7 and 8, but it can't last there. It's going to have to pull back again, back down to overlap this resistance, which is going to be 2.5%, and will be in an alternate trend structure again. So the truth is, there, Solana, if it keeps overperforming like that, that's a maximum 6 to 7% overperformance. That's still significant, but coming out of the existing 3 that we have now, it's just barely doubling it. And that means we're going to have to go back there again to pull back to the moving average. The second factor is we broke below those moving averages before. So I would tend to say some of the things don't line up. We've handled candle close significantly below. The moving average has reversed, which is not supposed to happen in those alternate trade structures. So the probability is to keep grinding our way higher, all the way up, baby, to 7% until, of course, we go back down to 2.5. That means going higher just to go lower afterwards. Doesn't seem to be very viable in terms of technical occurrence to me. Looking at the lenses of my strategy, I tend to say probabilities are narrow. The best probability for Solana as a very good asset would be to kind of stay there for the year ahead. Somewhat at least half of next year should be kind of retracement for Solana dominance. Retracement doesn't mean bearish. Remember, we're expecting to add up $5 trillion to this market share. That means Solana is just going to take 3% of it, somewhat. Between 2 to 3%. And I don't expect these market shares to rise. That doesn't mean Solana going down, it just means Solana not overperforming as everybody expected to. It might have already played that card, actually. That's what I'm saying here, that Solana definitely have been an overperformer, but it's pretty much already there, and now it's just going to have to deliver on the promises. Okay? So that's really the way to go. We're going to have to see that one playing out. If that truly is a breakout, well, it comes without the third range boundary, so maximum to me 6-7% for Solana. That's still significant, once again, but certainly not enough to take on the 20 points that Bitcoin could lose. Now, what worries me more is that, well, history has told us, and here we're going to zoom it out a bit, that, well, quite a lot of history has proven that it's not the first time this kind of card played out of significant overperformance just to kind of end up wasting everyone in the pattern and just violently going right back down. So this is the risk for Solana, actually. I tend to say, I'm not Solana bear, but I would tend to say there's really over-speculative behaviors now in Solana. It's just like that's the future. We're hunting airdrops or whatever. It's just very dangerous, fairly speaking, to say, well, history has told us that going up like crazy doesn't necessarily mean keep going up. That means, well, you can just be the stupidest one buying at the top, and you're going to be losing afterwards endlessly. So I don't think Solana is a bad asset. I'm just saying so many people kind of underestimate the risk. It might be very well buying at the top now. So I'm very cautious with that. History has proven that this happened. And back then, well, Ripple was the game changer. Remember that. Okay? So it's all a question of perspective. But history is told that these things have happened and may happen again. That's it. So for BNB now, very quickly, I see everybody just being absolutely outrageously bearish for these assets. But the first of all, well, it's been building ranges on the shorter time frame. So as you can see, the monthly is just hardly going to be measured as it's just gone up. So I tend to say we need to zoom down in here to the weekly, where we can clearly see that, well, this asset, despite what everything has said, has kind of ranged its way up. So it wasn't just like straight line up, baby, and we're going to destroy everything in the process. But in here, tend to be building the same thing. We've got one breakout, a second breakout. This one somewhat fails as well to install the trend durably. We kind of sustain prices on the rising moving average, and oh, guess what? We're kind of overlapping the previous resistance. So tend to say one thing, BNB, even though everyone is just thinking it's dead, I don't think it is, and frankly speaking, I'm kind of still supporting this project. I'm still not heavily convinced in the short term by the technical signals, and remember, these kinds of patterns still need to build a mature range, but one thing I would tend to agree on is that I think BNB is going to build its third range boundary. It's going to go there. It's got a bullish pattern, so I don't see that asset going lower, and if it solidly takes onto this area and succeed to go all the way up there, I think I'm going to buy a second test of the moving average. So frankly speaking, in here, I need to have a mature range, so I need a third range boundary first. I think BNB, if it succeeds rising right back up from the ashes, down from 3% to somewhat like 5%, that means taking an additional 2%. Remember, we have lots of points to distribute. In my angle of sight, if Bitcoin is ahead at 30 points of dominance in the coming years, that means someone's got to take 20. We've seen Ethereum, best case scenario, is going to take 10 out of these 20. That means there's still 10 points to distribute. And what we can see here is that, well, BNB could very well take a couple of them. Couple of points could kind of make sense. As it has a background bullish structure, I don't see the bearishness that everybody is talking about. At least, these are narratives. So I would tend to say people can talk. I look at the charts, and the charts tell me a different story. I don't see BNB being dead anyway. That's really the way to go. Cardano, on the other hand, well, I don't see that one being lived in. And that's sort of the way to go. I mean, this one, boom, boom, once again, buy at the high. Good luck with that. That's sort of the way to go. There is none of the patterns that I know of, despite the fact that this was an easy sell, okay? And that out of this was an easy buy, and this one is still underwater now, okay? It still couldn't be stopped out. So if you've bought Cardano somewhat May 2022, well, I would say you're still in. What you're waiting for now, as we broke below the buyable area, is, well, to build kind of a dumb pullback. That means prices need to rise back up again in the dumb zone and get out of it to buy again. So that means, roughly speaking, I think a couple of years from now, I don't expect anything to come out of Cardano. If it goes up, it's going to go down. So anything it takes on is going to be released afterwards. I don't see any other way. So that's really the way to go. Either these things loses market share or take some to lose them afterwards. And I'm interested to buy it only after it proves strength. Proven strength. For those who have already taken that trade back in 2022, you should still be in, and there's no reason to be, oh, all right, I need to go on some more fancy, faster horse, whatever. You're just going to take in the risks, and you're going to have to absorb the potential rewards. But the maximum rewards now is whenever it enters there, it's very likely going to face significant resistance. A lot of taking profits in the middle of that range. So frankly speaking, well, if you're in, you've taken some risks in terms of external market share being taken by competitors. If you ever regain those market shares, I would say we have 2.5%, get out of here. This resistant context is very likely going to be sold. So that's the way I see Cardano, very less likely going to take some market shares, and if it takes some, it's going to release them afterwards. Avalanche, I mean, this one's been talked about a lot. Once again, lots of volatility, therefore lots of mouths are being opened. Clearly simple one to trade, absolutely no range, so this was no trend. Like I said, whatever goes up is going to go down. It's just don't be the one that buys at the top. And when you don't know where you are in terms of strength maturity and the pattern, well, just don't be dumb enough to fall for FOMO. Just to say, let the market digest, give it some time, and that's the way to go. On the other hand, well, Avalanche, out of these things, in terms of relative market share dominance, remember, we're not talking about the prices, but in terms of portfolio allocation, September this year was the best moment for you to jump in for Avalanche, to say, okay, I'm loading in. And guess what? I told you that. I told you, well, out of the rotation that we've seen, speculative coins first, like Solana's, Chainlink, and so on, and AVAX would have its timing, and I definitely have loaded up some personally. Well, truth is now, what a rocket ship. I did exactly what I was expecting to do, means partial profit taking there, total profit there. I'm no longer having AVAX in the portfolio. As you can see, this one's disappeared. Just frankly speaking, I don't want it anymore. I mean, it's just gone through the targets immediately. There could still be a little bit of room to the upside. We're in a sellable area, and remember, we need to trade above the resistant context for a dumb boundary to happen. Well, truth is, we're very close to it, so if we ever go there, I mean, to me, AVAX going slightly higher, and I'm going to arbitrage it down. Just frankly, just selling it for some other asset. I think it's been a staggering overperformer. I'm definitely happy with the gains I made, but I'm not going to load this asset again until some range has happened. This is exactly, to me, the exact same structure as Solana. And just to say, there's no room for breaking it up, or this one goes 1-to-1 ratio right up to 2.5%, and that's all there is. And it's only going to go up to lose those market shares in the following years, to go back to overlap. So same story. AVAX, just like Solana, if they go up, short-lived. That's pretty much like Cardano. If we go up, that's going back down again. On the other hand, what we started to see is that if Ethereum goes up, it's going to stay there. If BNB goes up for whatever reason, it's going to face some resistance. But still, the value should somewhat still be what it is now. So not an overperformer durably, but in the short run, the probabilities to do it are much more significant than these guys, who are actually in a selling area. Okay? So what I would tend to say is that the narratives are exactly doing the opposite. They're saying like, yeah, BNB is dead, Binance is dead, CZ, whatever. And on the other hand, look at these beautiful horses like AVAX, Solana. Look at the performance lately. Well, I would tend to say they're all in sellable areas, and frankly, I see absolutely no reasons to support their thesis. Best they can do now is to keep on riding that same wave, straight line up, but that's just going to go all the way back painfully again. So that's just like, yeah, scoring 2 steps forward just to do 1 step backward afterwards. But the thing is that 1 step's already there, so all you have left now is 1 step forward for 1 step backward. TLDR, not value increasing. It's just going to shuffling the deck one more time. All right, if we go further than the curve, we've got Polkadot in here, very, very interesting kind of patterns. And as you can see, it wasn't easy to spot kind of the boundary stuff. Okay, back then we wouldn't be using this, was too short-lived. And oh boy, look at that, up, down. Oh, massive buy in here, very easy to figure out on the lower time frame. Of course, you didn't really have that context back then. And then goes up again. Woo, magnificent on that one again. So you've got the range boundaries. Okay, so 1, 2, 3, 4, fifth range boundary, and this one's going to this way down very dramatically. Now the boundaries are of course only going to wait for a dumb pullback best case scenario. That means the bestest S&K score is out of 69% or 0.69% is going somewhat like 1.2, and that's only going to lose these market shares again. So same thing again. As you can see, a lot of the pieces that could move now are pieces that will not move the value, that just kind of shuffle the deck just to go exactly back into the same place. We've seen that we were disagreed with that in terms of Bitcoin. Bitcoin, if it goes to 30%, is going to stay there for quite some time before, of course, it retraces back up again in the following years. But first of all, we're going to have to grind our way down there. And that means, well, those market shares need to be taken and held for quite some time. So we still don't see the viable candidates in here. And therefore, well, we just scrolled over the entire thing that made the headlines in those kinds of reports. Okay? Now, if we look at Chainlink, yeah, we're starting to see something interesting. That's one of the theses that I've seen, which I particularly tend to agree with. In here, we had a big, nice range. So this was trend. This, of course, was a little bit too much speculation. So we've gone up, down, and that means we're ranging. And as you can see, Chainlink is kind of buying this moving average, which never turned negative. We might have held a few candle closes below that one, but if you look at the monthly chart, they're almost perfectly lining. So exactly like the story of a total and total 3. So it tends to say Chainlink is one. Chainlink is going to play a game. It's going to play a significant share in this party. And I think the fact that we've brought in here inside the context instead of below just kind of tell me, yeah, this boy is a one that could do 1-1. Okay? This one could definitely have all the prerequisites for a straight line up type breakout. Okay? It's already had that delayed third range boundary back down there. So that means this one has everything it needs to go higher. It's been ranging significantly enough in the weekly chart. So that's really the way to go. Okay? Third range boundary would have been in here. And now we're all the way up to break. Meaning the breakout area for Link is 1.12% dominance. Link could settle higher on a 1-to-1 ratio. Same story. Remember, we can't go all the way to the moon. That would be somewhat like 4%. Okay? And it can go a bit higher, but that means afterwards, same thing, going back down again. But we're talking about significant market shares to grasp in here. We're at like 0.5, half of a percent, and we're talking about going all the way up to 4%. So here, there's a 3.5% to be taken. And remember there, it's not going up and crash. It's going up and retrace some of it. Okay? But that's all there is. In here, there's still a net 1% gain to be taken and kept. And that's the first one that I see in here. It would be able to move the value and retain the prices so that the dominance over time will remain where it is. There might be some kind of pullback, but remember the value will keep going up. We might have these oscillations, but that means if it goes back down and falls on overlap, that means there will be a fifth terminal wave to pull it higher, somewhat eventually like 5% and the like, and staying there. Remember, what I care about is who's going to stay, not just who's going to make the move and then pull it right back down violently. Okay, very importantly, to me, Chainlink is one asset. Very, very critically, and we can see that it definitely changes from what we've seen before. Another one that I'm particularly interested in is Matic, because same story. We've seen a big range in here, clear and neat breakout. Of course, it might sound like it's overwhelmingly bullish. I mean, say, well, I mean, this definitely looks like Solana, so what the heck is the difference? Well, the difference is that this one ranged before, and then it built a pullback in here. Very nice pullback to final excess. It's just kind of messed it around in here with a sine wave, but we can clearly see that this has been breakout. No, a slight trend follow in here, and then boom. We've got the nice pullback, final excess. So one thing I can tell is that this big boy is worth 0.7%. So one thing is, for sure to me, is that we're building another range in here, and I don't see this one losing any market share. So Matic, we tend to say, as long as it's below 0.70, that means it can gain some market shares. I hardly imagine it to break below 1%, but that still means, well, 0.5% in here could be gained and somewhat held over time. Okay, remember this one has terminated its trend, is making first to second range boundary. It's still trading above rising moving averages, by the way. And that means, well, to me, this one has significant chances to go to a third range boundary. Okay, bare minimum to it will be 90%, so I think Matic is going to gain some market shares and retain them, but somewhat going to range. So it's not something that's going to increase significant market share, but I would say for sure market shares are going to be at least above and consistently above for Matic, just because this one has a different trend structure. The others have just gone straight line up and then straight line down and whatever. This one isn't. Just like Chainlink, these had structures. Atom, well, you know that's one of my favorite, but once again, just looking at the charts, no bias in here, just to say, well, this one's a massive range. I mean, instead of in here saying Atom is weight 0.35%, it's just a very bare minimum we could say. I mean, this big boy has been oscillating across this level for too long, to the point that it says, well, 0.50 is a significant resistance, but well, boy, 0.25 is a significant support. We're just out of here, so once again, everybody's like, yeah, the Atom doesn't serve any purpose, it doesn't capture any value. Well, do whatever it is that you want. I think this is where I'm blindly taking the risk of proving wrong everybody who's saying that. Well, the truth is, in here, we could actually even build a monthly range looking at that. That would be a mature range looking at just how many boundaries we've built so far with this. Okay, if you just pull it out, there's already like 7 or 10 boundaries. That means one thing. If ever, Atom is attempting to go 0.5%, if it breaks above it, oh boy, that's going to be a trend. That means, well, this big boy is going to say goodbye to 0.35%, is going to look at for new price discovery in terms of market share. That means breaking above this, bare minimum is to do the 1-to-1 ratio before proceeding to breakout. So remember, that's the way to go. Take the highest high beforehand, take the lowest candle close, go for a 1-to-1 or 2-to-1. That means expect somewhat like 1.43. That's the value. Remember that if we go there, we're going to stay there. We're going to pull back, final excess, and kind of range there. So expect this to kind of play out. That means out of the 0.27%, which we're in, expect somewhat like 1+% gain for Atom if it breaks above. The second thing that you need to figure out is that those 1% are just guesstimation out of the current range. We could do way more than that. So frankly, that just says minimum 1% to be captured by Atom and held. And that doesn't mean market top. That just means the guy can go higher, but it will sustain market value at a 1% premium out of current market dominance. So like I said, over mature range, you can look for the craziest assets which just go bunkers up. Truth is told that as well, just like Matic was ranging in very, very limited market share before, well, look at this beautiful breakout. That means the end game of a trend you can't predict. One thing you can tell for sure when the range is settled is that the bare minimum for the expectable value is twice that range. So one thing I can say is that minimum 1.42% for Atom could be more. And frankly, I think, well, if the thesis just aligns correctly, Atom has all it needs to be a very heavyweight in the future. Just once again, graphically, needs to break above this. So until we get there and break, I would entirely agree with those who say, yeah, I mean, this is just the worst performer we've ever seen, underperforming the market significantly. Well, it's not. Frankly, if you look at it, you would tend to say, well, it's just like base performance. It's the definition of base performance, by the way. So I frankly disagree with the underperformance thesis for Atom. It's just wrong. It's just that right now, yeah, we're below average performance. That's all I would tend to say. But if we go higher and if we break, oh, this boy is going to deliver quite significantly. ICP, well, as you can see, this guy is a different kind of context, but we're just looking at the charts, no bias. And just to say, well, looking at it, there's really no structure. The moving average is constantly bearish. There's the question of this overvaluation in the early stages. Which I don't think will recover. But until then, well, there's no structure there. That means we've gone down. We could go higher. I'm not against ICP going higher, frankly. It's just I don't understand what this project does. And therefore, I'm not going to either be a critic or whatever, but sounds kind of dystopian to me. But the thing is that, well, so long as this boy is going down, I'm not going to buy it. If it succeeds, holding to what's been done recently and kind of building another range boundary, it needs to pull right back up to 0.52. And if it does, well, then I'm going to be able to have a support, a resistance, and I'm going to do my dumb trades in between those two, and that's it. Until this guy goes up, I don't know where it's going. So once again, sky is the limit, but I doubt there's room for everyone in the sky. So frankly, well, I would tend to say significant resistance is expected if this big boy tried to go up 53%. And for now, it's just going constantly down. So I would tend to say there is, of course, a solid ground in here. This thing can hardly go to zero. It would take some time to get there. So I would say ICP is a big question mark to me. Could go higher this cycle, but I don't know how much. And I think there's not much room to grow so long as there are significant resistance to be tested at 0.50%. Injective? Well, oh boy, we've had some kind of a range, but look at it. This is not a trend, okay? This is like the future of all. If you just take the assumption of the range being broken, we would tend to say, yeah, guesstimated value to be at 0.06%, which frankly I thought that was very good value for the project. Well now, whoa, look at that. Extremely overbought. We are definitely fucking the context after the breakout. So remember, the breakout's one thing, and I would definitely be agreed with this guy to eat away on the external market shares. Now it's not eating away. It's just looking at how high can we go? Boys, this is going to V top reverse. I wouldn't be among those who look for the top. All I'm saying is, well, good luck with that. If you're in with good prices, keep riding the wave so long as it does, but expect this thing to go retrace 80% of it bare minimum. So currently, if this boy was to build a market top in here, that would be retracing right back down to this kind of area, which I think we're going to retrace anyway. Potentially further, okay, remember that doesn't mean we're buying in here. It just means right now if I need to buy Injective, which still think is a good project, just absolutely outrageously stupidly traded now, that would be retracing significantly for me to consider it. So I think losing market share or any market share that's going to be gained are going to be lost anyway. So same story over again. Can go for the sun, but you're going to burn yourself out. OP, up only. I don't know anything, no range, so I can't forecast these. These are the kind of assets I don't know anything. They look for a market top. Once they find it, they're going to retrace most of it, as we know. Monero, on the other hand, we got quite a context here. So as you can see, we're going to have to zoom out to the monthly chart, looking at how much experience we have. Well, these assets, as you can see, squeezing it down. So that's one thesis that everybody is just saying, okay, it doesn't exist. That's the way to go. So privacy isn't really a thing. We don't need that. Well, once again, privacy, when you need it, is when you're going to buy it, is when you need it the most. So I would tend to say privacy has been absolutely forgot about, very dangerously, by the way. Truth is that in here, we're below the support. That means out of these current contexts, well, either privacy worth nothing. I mean, we're going to go below the context, but as you can see, the context in here are not well placed. So frankly, if this thing is a big range, well, that means for us 1.70 is too much. 0.50 is the value area to buy it. As we can see, the moving average is still bearish. So I don't see any reason this one traded significantly below the buyable area. That means I think maximum for Monero is to invalidate the thesis, to say, well, this thing is dead, it doesn't serve any purpose. If it does serve a purpose, I think it has to pull out the classical pattern. That means out of the 0.23, which we're now, we need to retrace right back up to 1%. That's kind of a significant 0.8%. It's far from being nothing, but most of it's going to be erased afterwards back down to 50, okay, to 0.50. But still means net, this one could operate as again. Of course, that's at the very big risk-taking of saying, yeah, Monero could very well be nothing, okay? But once again, the difference is this one has history to back that we have traded there before. And some people may say, yeah, what's the matter, Phil? I mean, we could just be looking at new discovery. Yeah, sure thing. When you're discovering prices, that's always better for speculation. I'm value investors, meaning the more information I can gather, the better I can risk manage my assessments. Here, clearly stated, this thing has traded for quite a significant amount of time at 1% general market dominance. And, well, I think we're going to get back there to somewhat there. Like, there have been third range boundaries, so this area has been traded with value back then. I think we're going back there to somewhat 1%. It's not going to last very long, and it's very likely going to pull back down to 0.50 afterwards. There are renders and the like. Yeah, going up only, bro. I mean, even the weekly chart doesn't have in here enough candles. So remember, the value is bare minimum weekly chart. So here is just, well, yeah, go higher. Ride that trend so long as it does. When it reverses, don't be among the dumbest ones who bought the top. Aave, yeah, we've got some experience out there. Clearly easy to say that out of the market top that's been built, we can see the third range boundary. That means the value is settled in here. I would tend to say we're going to go back there someday. And as you can see, we've traded below the context to buy, or below the buyable area. So in here, it's kind of very easy to see, is to say, well, if this thing is a viable thesis, Bare minimum is same story, gonna go there and then do this. The difference is, once again, we've got history to say value has been traded back then, so I think we're gonna get there. That's not just like the assets have gone up and down with no third range boundary. In here, we've traded that range. That means this was a value back then. Chances are, if this thing isn't a thing of the past, I mean, I would definitely argue that AVE, we kind of need it. That means we're going to get back there. So I think AVE is among those wins. And ONSC again, if it pulls back afterwards, that's just to go higher. That means this is a net win. In the future, this thing, if it goes there, it's going to be bought there. That means anything that's going to be retraced is going to be to offer a bullish opportunity, which is likely going to be taken as it is by the market. So I would say net future for AVE, I would tend to say increasing dominance. Just looking at the charts. But this one is risky. Remember, this one's gone down. It's been squeezing out. So that means we need to invalidate those bearish theses to go right back, at least deep in the toe, into the down zone. Rune, one kind of an asset that just did exactly that. As you can see, it's been going up, kind of weirdly, then going down violently, but this one settled its fucking third range boundary once again. So this means this value was traded back then. We've gone there, destroyed everything, like, yeah, this thing is a thing of the past, that's a bullshit, whatever. Though we've just gone severely lower there, all right? By just doing this, what's next? Yeah, of course, back up into the down zone, which means if AVE goes right back down there, I'm going to buy it eyes closed, okay? So that means AVE could lose some market share out of what we are now, but that's temporary and it's going to take it back again. Sorry, that's Rune. So Rune going down, I don't have this one in the portfolio, though hear me very correctly. If this guy goes down here, I'm going to swap it for some other asset I have. I mean, I'm going to sell some other asset that's in the sellable area just to buy that one instead. That just means swapping one for the other. That doesn't mean buying with cash out of nowhere. It's just really not that thing. What I'm saying is that just this one is good to prove you that AVE can just score that one very clearly as well. Others have done it. That doesn't mean when you're depressed, everybody thinks you're going to be dead. Just boom, boom, boom. Immediately people just go for the narrative and they figure out that it's backed by value. And that's exactly what I'm trying to let you figure out there. It's just a matter of narratives. People just spit out words out there and just say when one thing goes up, we need to explain why. Well, the truth is most of the time, the charts themselves told the whole story. Okay? So that's really the way to go. Another one that I particularly like, kind of this one. Because remember, I told you, I kind of like the assets that build range. Just like Adam, I think synthetics is a very good asset to look for. This one has a mature range and it's already built on accumulation. Remember, accumulations are when you build a second range inside a bigger one and that this second range doesn't retrace more than 61%, which is the bottom of the dumb zone. So this is maximum retracement. I don't want prices to go anywhere lower than that, okay? As you can see, the moving average is rising. So this has also built everything I need to in order to figure out that an accumulation is played out. The range is matured, we oversold, which is the bottom. So I've got everything I need to say this is an accumulation. We've broken that accumulation to the upside. I can tell you now I've entered synthetics in the portfolio. Of course, very low margins. This is a low cap, so nothing too fancy. This is below 2%. That's even below 1% allocation in the portfolio. That's really the way to go, but I'm buying this one. I mean, just like I said, I put my money where my mouth is. This is a freakingly good chart. I'm in. Though that's the way to go. The gains that I've taken away, like taking AVAXs out the table, taking some Sol out the table, this is where I put it down, okay? Some of it is now going into synthetics. Synthetics, if it succeeds into breaking, it means it needs to break the 9. I think it's already broken the accumulation, which frankly I think is positive. Though now, next move is 1-to-1 ratio, okay? So same story again, range is mature, everything is in here to say the value is going up. If this guy breaks up, it's going to keep the gains that it makes in the future. Same thing, okay, the breakout will be the previous high point, doubled out the bottom of that range to the lowest close. That would be somewhat, yeah, we need to take monthly, that would be good. Okay, so that means in here, bare minimum value to be settled somewhat like 0.20%, okay? So that's really out of somewhat nothing. This one could score at least 0.20%. And remember, once again, speculation can pull it right higher than that. That means one thing we've ranged before going higher, and that's the key difference. You'll hear me say that over and over again. if you go higher without preparation, that means you're going higher with no solid grounds to stand on. If you've built your house on solid grounds, then at least I can say how high you can go and staying there. All right. Otherwise, build me some nice castle on shaky grounds, and I can guarantee that just by the next earthquake, your thing is going to fall apart. Okay? So that's really the way to go. Solid foundations matter a lot. And, well, another one that's very particularly interesting, pay that one very good attention, because once again, we're looking at market caps and dominance relative to the others. And this one has a lot of token dilution with vesting schedules ahead. But if you look at it, well, weekly chart, range is mature. As you can see, it's hard to say this is valid because it's basically 0%. Okay, so one here is that we've gone high, low, build a third range boundary, and now, hey, we were accumulating as well. Oh, trending signals on the bottom on a rising moving average. Retracing somewhat like 60%. Might sound fucking familiar, does it? That's really the way to go. In here, same story. DYDX is pulling an accumulation ready for breakout. That means if DYDX breaks above the 0.05%, that's to me something that's never going to be retraced down to again in the future. That's net dominance gain. If this boy goes higher and succeeds breaking this area, well, that means the bulls have won. They're going to score some gains in the future. Same story in here. Take the previous broken market top, pull it to the lowest candle preceding candle close, and that means bare minimum 0.15%. So as you can see, this one as well, I think it's the bare minimum. But who are the net gainers against who are the speculative calls? Here's the entire thesis. When I look at the charts, I can clearly distinguish the two. There are definitely some speculative bets. Very dangerous, by the way, because we're definitely in the area in which they can either make another step forward before doing it backward anyway. That means, is the value that's going to be created truly going to be sustained over time? The answer is likely no. That means, to me, that if you really want to jump in those assets, that's short-term speculation. You're not investing in Solana and AVAX. You're just betting that they're going to go further just to go backward later, which means you could very well buy them safer later instead of now. So I would tend to say in a risk-reward balance kind of perspective, there are two ways of the equations. The first one is to say, well, a lot of assets have already spoken. They've made one step forward. It's a significant step. It's very volatile. But as we see, we've just pulled prices into sellable area. So now the market is testing sellers' resistance. If the sellers somewhat score the points, your assets will just reject the top of a range. And history has shown that, boy, we can reject those range boundaries quite a lot of times. So question is, I have future forecasters saying, yeah, definitely, Solana's future is above 2% kind of market shares. I would tend to say, well, prove it to me. The first one is, if it goes higher and if it wants to settle at a higher kind of market cap, I either want to either stay there for at least 6 months now, kind of that just this big rally, build an accumulation, which can retrace right down to 1%, by the way, and we're at 3, so that could be a significant retracement, okay? What I would like to say is this is exactly what happened on some other charts. I mean, you should start to see it now. What you see here is exactly what some others have already played out, so this is not just like throwing out some randomness out here and say this or that could happen, but this or that or that or that or that. It's just to say, well, there are structures that tend to kind of replicate significantly. One that can definitely give you value up and staying there would be an accumulation. So I would tend to say Solana, if you really want to see me being bullish on Solana again, it's going to be somewhat through half of next year. And if it consolidates into that 2, 3, somewhat 1.5% dominance in the general market, I'll be damn ready to buy it when no one else will be talking about it again. Because once again, it might underperform and people will be like, yeah, but I bought the top. Or now it's underperforming. Well, you told me it was going to overperform. The truth is, well, to overperform, it's going to underperform afterwards, quite significantly. Because, of course, when you do those alternate trend structure, the second reversal is always a V-top as well. I mean, this market is going to go bullish to bearish. It's going to build a third range boundary once again. But the thing is that if Solana really wants to settle in the 5% area, that's all it can take. That means those who are forecasting Solana 10, 12%. Those who say Solana is going to flip Ethereum. Oh, for fuck's sake, that doesn't make any sense. it can happen very shortly. That means Ethereum needs to be in its worst case scenario, like meaning breaking 8.20%, which we said can go there, but very likely not going to last. So that means those who are talking about flipping Solana Ethereum just think Solana is going to go for the best case scenario, straight line up, all the way up to 8%, which is not going to stay very long, then retrace, and it's betting as well that Ethereum will be the heaviest underperforming, halving its current market shares down to 8.20%, which we've seen could go there, very unlikely, but if we go there, it's not going to last very long. So one thing is for sure, those guys say that something is going to happen because God knows what, their thesis says they will, but it's not going to last anyway. So these guys are talking about speculation, not value. And that's really what drives me crazy now, because it seems to be like there are two worlds in this game. The speculative short-term kind of calling the future very dangerously, which these guys generally don't do, and now they're playing it. Like they're doing something very dangerous to me, meaning they all tend to agree on following the narratives, which they generally don't. But most importantly, they kind of follow narratives that contradicts the thesis itself. And to say, well, yeah, we can go up, but if it's just to go down later, what's the point of taking the risks now? I'm not saying that those who bought the lows of Solana as well as AVAX have made a stupid choice. All I'm saying is I'm not in this boat again anymore. I'll be there again, somewhat couple of years in the future. I'll let you guys ride that wave so long as you want to. All I'm saying is good luck, because there's really, really only one chance for you to succeed, is to be right. And if anything goes differently, like I said, this could be a market top going right back down to the bottom of the range. We've seen some assets who've done that, and there were the heavyweights of the time. There were the unbeatable ripples and stuff like that. Well, they did pull back very violently. Truth is, well, some others who have sustained value, and I definitely think Sol has some, just like the Alves, the synthetics, the runes, the DYDXs, they're useful kinds of tokens. So, well, I think building those kind of accumulations would be the best case scenario for Solana. If it wants to build a trend that is sustainably in the longer run going for somewhere like 10, 12%, as you can see, once again, look at it, don't get dumb, okay? That means Sol could strike a 7.5% and above in terms of holding value. That means not just going there and wasting time, that means going there and staying there. That will require at least a couple of quarters to range there for Sol. Wouldn't that really be a problem? I don't think it will. I frankly think this is the best case scenario. Now for the other speculative tokens like renders and the like, all they're related somewhat to Solana, closer or later, closer or not, they're all kind of jump capital squared. Though in that kind of stuff, I would tend to say, I'm very surprised with all of those reports kind of agreeing on that narrative of Ethereum going to lose market share, where Solana is going to take them. All I can see here is that if it plays out that way, that's very speculative, that's very short-lived, and that's not going to sustain the movement forwards that we've seen. It's all going to be retracing afterwards. That means, well, Ethereum regaining its market shares violently, and all those who took them were going to lose it again. So that seems to me like gambling that something is going to happen just for it to be reversed afterwards. What I like still is that some reports, particularly the Messari one, tend to agree with that and kind of go all the way to say it and to say, well, despite the fact that Ethereum is going to go through its most major upgrade, which is going to significantly increase scalability, well, we still somewhat forecast different stuff with the prices. So at least I like the contradiction there, to say, well, we somewhat see that the fundamentals are going in the other way, but the prices will do this. And I kind of like that assumption, because at least that's just showing with words the kind of weird moment which we're in. I think we're at the junction of two different futures. Either crypto is going to go yet another bunker cycle, short-lived, just to be heavily reversed one more time, yet another bubble, or once again, this time around is going to be different. And if that's it, and if I'm the ones calling the shot again to say, well, this time around I see too much consensus out there and saying, yeah, that's going to be the same party all over again. The fastest horses ride the fastest, and then they get to crash down back to earth. I don't see that happening this time around. Frankly, for the simple reasons that if I look at the crypto total, I think what we've been sold on the previous cycle of this super cycle and stuff like that, I think is exactly what we're going to get this time around. The wave 5 extend. That means if we ever go back to the all-time highs somewhat, We can definitely go there, and that's an open door. There are some significant gains to be made, but I think most of those gains are in the heavyweights. I think the asset that everybody agrees to say will follow with the biggest ever running upgrades of a running chain, which will have tremendous breakthrough effects on its scalability and its layer 2s particularly, well, everybody agrees with that, still somewhat finds a way to make it an underperformer. I would tend to say I'm cautiously saying I think they're wrong. I'm going to go in here with the kind of contrarian side of the equation and to say they all agree on overperforming Solana, underperforming Ethereum. I would make the opposite bet. I'm loading in Ethereum. I've released Solana, taking entire profits on AVAX. I'm taking some risks doing and saying that. Well, I could be wrong once again, and I'm going to be publicly shamed for doing such a thing. Because if the gainers are these short-lived assets, like AVAX doubling up, Solana doubling up as well, just to retrace afterwards, well, guess what? I'm going to take them on retracements. Though I could be wrong, and at least I have the humble opinion to say it clearly. I could be wrong. I think those trades are way more speculative than they're displayed as. But on the other hand, I'm playing the fundamentals. I think the fundamentals plead for these potential V-top, heavy, longer, eventually, cycle to the upside. I know it can be dumb, but the thing is that the difference I have is that the structure I see on the crypto total is not the kind of structure that goes up and then flushes all away. That's the kind of structure that goes up and stays there. That's the reason why the basic of my thesis is I'm looking for assets that can take market shares and keep them. Also remembering that I think there's another kind of asset that doesn't necessarily exist now, which is going to take a significant market share in the future, possibly through a bubble of some sort. I think data availability is an underestimated kind of thing that nobody has really been figuring out so far. So we'll see. So many theses. I'm not going to play the smart guy in here saying I'm going to figure out out of the almighty possibilities that are out there. But one thing I can tell now is that I'm sorry, I'm going to take the contrarian side from the Messaris and the like. That's my at least that's my forecast for 2024 for cryptos in terms of relative portfolio dominance. And remember, 2024 could be a very boring year. If for whatever reason we were just to build a third-range boundary and range in here and accumulate ahead of the breakout, I wouldn't be surprised. So I'm not calling for a bullish 2024. All I'm saying is external factor will implicate the market very dramatically. We're having an election year in the US. There's lots of elections worldwide. So it's going to be a very, very critical year for volatility in crypto. Very sensitive to external factors. So I would be too stupid to call it bullish. All I would tend to say is I don't know what the prices are going to do. All I do is that what I put it in, I'm not going to pull it out. So the only question that matters to me now is who I'm putting my chips on. And by looking at the charts, here are the ones I'll support. Heavily Ethereum. I think we're headed 25%, and all this narrative of going down 8 beforehand doesn't make any sense to me. We've tested that area twice, and it's been positively reacting ever since. I think we're going for the 25% resistance. Is it going to flip Bitcoin? I doubt it. Bitcoin's going to be it's going to be 30%, and it's going to be an area where it's going to be important to support Bitcoin. Bitcoin is not going to zero ever. Okay, so that's really the way to go. Bitcoin's always going to be there. And the market will take too much risks with the Ethereum, with the growth trade, okay? That's where I think BTC safety could play a game. Going right back up to 20, to 50 or whatever. I don't know. All I know is that there's going to be a Bitcoin safety play afterwards. Though, once again, it's going to take years before Bitcoin takes back on the growth market share. Okay, but remember, a healthy market on crypto is a market in which Bitcoin dominance goes down. Okay, so if you're figuring out innovation in the crypto industry, bull market ahead, you don't want to see Bitcoin dominance going higher. So that's the number one thesis to me. Those who see Bitcoin dominance going further higher, I kind of say I disagree with that, and history has proven me right. So we'll see if that one plays me right again. I'm not playing the timing. I'm saying could take a few years to get there, but I think we're ahead of a next innovation cycle. There are lots of other theses that we need to be tested before considering that thing wrapped up. That's going to be it for today. So once again, don't play out this with the actual prices. It's not the appropriate time now to constitute a crypto portfolio with fiat currencies. Now is the appropriate time now that the recovery phase is kind of pretty mature now, or maturing. Now is the time to choose your chips, to place your chips on the table. Choose your favorite players. But my hunch is in here, I'm taking the value side of the equation. I'm only looking for those who can take and retain. That's it. I'm going to leave you guys. Have some nice holidays for your New Year's Eve. I mean, we're already passed through Christmas. So once again, happy Christmas to everyone. Happy New Year in advance. See you on the other side. Bye-bye.